Meyer with BiggerPockets. Welcome to Deal of the Day. Today we have a really interesting Deal of the Day for you guys. It's actually something we haven't done before. We had a member named Christian Wathne who submitted a deal for us on the BiggerPockets forums. And he is asking us the best strategy for a property that he already owns. So he has done a rehab and is wondering whether he should sell it, basically flip the house, or he should try the BRRRR strategy, basically refinancing the house, holding on to it, and then managing the property, turning it into a rental property. So this is a new kind of deal that we have not done in the past, so definitely stick around and check this out. In the meantime, a couple of things. First things first. If you can do us a favor, if you love this type of content that we are providing for you free here at BiggerPockets, please share this with your friends. We would really appreciate getting a little boost on our viewership. I have to justify my time for spending it doing this with you guys, so the more viewers, the better. We'll get more comments, we'll get more questions. It will just be better for everyone if we just get this going. So please, like, share, comment. We really want to be able to make this content for you, and that really helps us do it. So that's the first thing. Second thing, if you have a deal, let us know. We are always looking for good deals to do here on Deal of the Day. We weren't getting that many. When we repost it onto the forums, we get a couple of more. And just a couple of tips here. The more information that you can give us about the deal that you want us to analyze, the more likely it is that we are going to select your deal. Christian gave us a ton of information and a really interesting scenario, and that's why we picked it. So definitely let us know all of the financing deals, how much money you've spent, where your experience level's at. All of that is super important to us. I can see already that Christian is following us here today. Again, thank you, Christian, for submitting this deal. We're super excited to analyze this. I had a lot of fun looking at this one today. I was actually going back and forth with Christian on BiggerPockets today, asking him some questions about the particulars of his deal, because we really want to find the best deal here for Christian, give him the best recommendation possible. So we're about to jump right into this, guys. Again, if you could share and like this, ask questions in the comments. We really want people participating in these sorts of things. So as much as you can, let us know what you like about this, what you want to know, and we will do the best that we can right here. All right, so let's get into this thing. So Christian is coming to us from Renton, Washington. He has two properties already. Basically, his first deal is in Seattle, and he has a ton of equity in that property. So he has $700,000 value of his house and $335,000 in equity. So great job, Christian. Obviously, that first deal has been extremely successful for you, and really good job. And I'm excited that you're looking at your second deal. But the property that we're going to be talking about today is actually Christian's second deal. And what we have is a house built in 1958. It's a 3-bed, 1-bath in Renton, Washington. And Christian, again, gave us a ton of great information about this and told us that Renton, Washington is a sort of a Class B neighborhood right outside Seattle, but still a really good job market and a strong rental market. And we're going to be getting into all of that soon. But let's just talk about what Christian has done with the deal so far. I do think we're frozen. If you can hear me still, just hold on one sec, and we will hopefully get this back up and running.
All right, we're good.
Are you? Okay. Sorry if we just cut out, guys. We had little technical difficulties. Susan, I can see that it froze. I'm sorry. Hopefully we are back live with you. Glad to hear that you guys can hear me again. So we are going to thank you guys. Appreciate you letting us know. Really appreciate, again, this is live. Things do happen. So keeping us updated on if you're getting these videos, super helpful for us. All right, so far we got this a 3-bed, 1-bath house in Renton, Washington. And Christian has done an amazing gut job on it and renovated the inside and out. And if you haven't seen it yet, you can go to BiggerPockets.com on the forums. There's a thread that is called Deal of the Day Submissions. You can go on there and you can see actually some images from this rehab that Christian has done. Looks awesome. I love the kitchen. And so definitely go check that out if you can. So he has put in $58,000. So let's just go down to the deal. So he purchased it for $218,000. All right, and then he put another $58,000 into there for a renovation. And then it came out to a total of $281,000 total. So as you can see, what is that? That is $276, but there was probably $5,000 in closing costs, if my math is right. And so we're at $281K for total. All right, so that's the full extent of the renovation. Now Christian says he's done his homework, he's looked at what this should get, and he thinks that if he were just to sell it right now, he would get $330,000 for the deal. So this is where he's at so far. So sell would equal $330,000. He's also done some of the math for me here and said that after commissions and some of the closing costs and all that, he would net about $307,000. Not bad at all. Okay, so again, that is one scenario. The other scenario is not to sell it and to turn this into a rental property, which is what Christian has already said in his post when he put this on the BiggerPockets forums, was that his goal is the long term to build up a rental portfolio. So basically the way we're going to look at this deal is which scenario here, selling and flipping the house or holding and doing a BRRRR strategy, is going to get Christian closer to his long-term deal. Because I think what's important for everyone out there to realize is that either way, Christian's doing great. He's either going to make some cash on his flip or he's going to start building his portfolio. So really the only way to look at a deal like this where both scenarios are good is what are you trying to accomplish over the long term? And that's one of the amazing parts of real estate investing is it's really up to you what you want to accomplish and what your long-term goals are, and then you have to back into a strategy and individual deals based on that long-term vision. And since Christian has already articulated what that long-term vision is, which is creating a rental portfolio over the long term, that's what we're going to do. We're going to look at what strategy is going to get him closer to that. So, again, before I do this, if you guys can hear me, please, I'd love to see you sharing some of this stuff. Shoot me some more comments. I really want to see any particular questions you have as we go. I know we haven't gotten into any of the math yet, but as we go, put some comments in there. If someone else you know wants to become a real estate investor, tag them in this video. Get them to come and join this live session right now. They'll be learning a lot, hopefully, and it will definitely help us out here at BiggerPockets as well. So the first scenario that we're going to look at here is going to be the flip scenario. So if you're not familiar already, flipping is basically buying a house, usually renovate it, put in some effort, and then you sell it for a higher price, usually as quickly as you can. I did get a question from Susan Knight. She asked, did he buy cash or finance? This is actually what I was talking to Christian about all day today on BiggerPockets, which is he actually got the house 90% hard money and 10% his own equity. So that's a really important question, Susan. Thank you for asking that, because basically the deal is not set up right now for Christian to hold on to it, because hard money comes at a much higher percent. It's basically geared towards flipping. So you're getting that money sometimes 8, 10, 12%, rather than a mortgage, which is 3, 4, 5%. So if you're going to hold on to the property and turn it into a rental, you can't keep it as a hard money finance deal. You have to refinance, or you have to sell it and flip. And hard money is great for flipping, don't get me wrong, but Christian obviously thought when he bought this deal that he was going to flip it. That's probably why he went with the hard money financing option right out of the gate. And that's why he's presented with these two options now, and why this is such an interesting deal. So let's get back to the flip. Basically, Christian says that he could sell it for $330,000. Obviously, you have to pay commissions to brokers, some closing costs, and you're at $307, right? Now remember, Christian was in for $281,000, so he spent $281 And what does that come out to? $26,000. Okay, so if Christian were to sell it, he would get $26,000 in net profit. Really good. I mean, just look at that in terms of a return on investment or a cash-on-cash return. He put in 53 plus the closing cost, so $63,000 was his total out-of-cash expense, and he came out with $26,000. That's probably like 40 or 45% cash-on-cash return. I don't remember what the timeline was for this, but no matter what that was, that's an unbelievable return. Christian, great job. If this is the way you decide to go, flipping it, really pretty amazing deal. Pretty cool. So I do have a question from Calvin Hall that says, when you say hard money, what do you mean? That's a great question. It's basically like a short-term loan. So if you were trying to flip a house, you can go find a hard money lender, and that person will lend you money to do both purchase the house and do the renovations on the house, and they get money back. So just like a bank, they charge you interest. But unlike a mortgage, which is sort of underwritten by a bank, and they'll charge you less, 3 or 4% on your money, hard money comes at a higher cost. That's because it's a lot riskier, so this makes sense. But you'll be paying 10 or 12% on that money. That's why when you flip deals, speed is really key. If you can you're going to be paying monthly payments on that hard money, and if you can cut a month or a couple of weeks off of the amount of time it takes you to renovate the entire property and sell it, you're going to have to make less payments on that hard money. You're paying less interest, so your profits are going to go up. So that is one thing to think about when you're getting hard money and flipping, is how fast can you do it? Every day that you are slow, every week, every month, you are going to lose money on this deal. So flipping is really a speed game as well as just a renovation and a numbers game as well. Hopefully that helps, Calvin. So $26,000 here for the flip, which would be awesome. I mean, that's a really, really good deal and really impressive. So great job there, Christian. The other option is to go with a BRRRR strategy. So if you're not familiar with this, it's something we've coined here at BiggerPockets, and it stands for buy, rehab, refinance, rent, and repeat. So let's go through those quickly. Buy, pretty simple. You buy a property. Second step, you rehab it. So like a flip, you are actually improving the property. We can call this forced appreciation. You can call it rehab. Basically what you're doing is you're making the property better. Once you've done that, you can refinance. And so we'll talk a bit about refinancing, but basically what this means is that you can get a new mortgage or change the terms of your financing on an individual property. And so the benefit of doing this in a situation like this is you have built equity in the property. And I will go over that in a minute, a little bit more detail about how the refinancing structure works. The next step would to be rent. So once you've done all this stuff, once you've refinanced, you have a great mortgage, not locked in, that's when you rent it out. You're going to get the maximum amount of value. That's the time. Go find a great tenant and start collecting on that cash flow if that's your game. And then repeat. Keep doing this. That's the simple thing about real estate. Find a strategy that works for you. Keep doing it. So we're going to talk a little bit about refinancing here, which is the critical third step in the BRRRR strategy, and how that works, so that we can explain to all of you watching and help Christian decide if flipping this deal or holding on to it is going to be a better long-term version for it. Okay, so here's what refinancing is. You buy a property with a mortgage. You might just find the best mortgage that you can at the time that will allow you to buy the property. I mean, everyone out here who's watching this knows that the market is really hot right now. It can be difficult to find a property. Maybe you're not getting the best rate. Maybe you're putting more down than you want to. Maybe you're putting less down than you want to. But you just want to lock it in, so you do that. You find the strategy. It's a low interest rate. You do it. Maybe you're house hacking and you do an FHA loan. But then, for whatever reason, you decide that you want to either move to a new property or you want to buy a new property, and the opportunity arises to refinance. This allows you to do several things. One, it allows you to change. If you don't want to live in a house anymore and you're in an FHA loan, you're going to have to refinance to a conventional loan. That's one option. The next option is what we call a cash out refi, and that's what we're going to be talking about today, which is when you've built enough equity in your property where you can actually refinance your house and the bank will basically write you a check. And I know that sounds crazy, but it works. I actually did this just about a year ago. I did this with one of my properties. I refinanced a multifamily. I got cash out and was able to buy another single family house without coming out of pocket for $1. So this is an awesome strategy, and I'm going to explain it a little bit more here, just using pretty simple math and pretty simple numbers here. So again, this is not a real deal. I'm just going to use math that is easy to use so we can all understand and follow along. Let's say that you buy a house for $200,000, right? So I'm just going to write this up here. I'm going to erase this so we can keep track, right? So you buy a house for $200,000. Then, let's say you put 20% down, right? So then you put $40K down, right? All right. So let's say after 10 years, let's say 5 years, that property is worth $300,000. All right, so that's gone up $100,000. You can refinance your house now because you have $100,000 in value that is not currently being accounted for. And so what you could do is basically start your mortgage over. So you're 5 years in, and you probably owe now, you owed 160, and now you probably owe 140 after 5 years on your mortgage. You're saying, I'm going to take out a new mortgage on this house because it is $300,000 now, and if I put 20% down, that would be $60K. So I'm going to keep $60K in the property, but that leaves a total of $240,000 left, right? Because you're putting your mortgage out for this value of the house at $300,000, you're putting your 20% down at $60K, but you still only owe the bank $160, right? Or we're going to say $140 because you've probably paid down some of your mortgage. So you owe the bank, after 5 years of making your payments, $140,000, right? So, but there's $240,000. So you get $240,000, you pay back the bank the $140,000, leaving you with $100,000 that the bank is now giving you. They're going to write you a check for this money when you actually go through and refinance this. There are a lot of steps to this. You have to get the house appraised, so that's how they know it's worth $300K, because you're not actually selling it, but you're sort of mocking a sale. So the bank is going to send out an appraiser, and you're going to get for say $300,000. You're going to have closing costs. That's important. And it's important to understand that your mortgage payment is going to go up significantly when you do this. You were paying a mortgage on a $200,000 property. Now you're paying a mortgage on a $300,000 property. So your cash flow is going to go down. That's important to note. But you just got $100,000 to go buy another property or two. If you can buy another property at $300K, now you can buy one property. If you put another $20K, you can buy 2 properties. So this is an awesome strategy. I mean, I can't recommend it enough. This is really, really important to do. So if you guys, the important thing too is only do this if you can get a new good mortgage. Like if you had a deal where you were paying 3% and now the bank's like, we'll refinance you for 10%. Don't do that. That's just a terrible idea. But if you can get a similar terms, and if it's not going to reduce your cash flow that much, and you can get cash to improve your rental portfolio, I mean, that's a great deal. I would definitely think about doing this if you're trying to expand your portfolio. If you're just trying to live off the cash flow you got, don't do it. But if you're trying to grow, think about refinancing. So, before we go into the hold strategy, I'm super happy to see that we have like 100 people at least watching live right now. I really want to get people sharing this kind of content. So our goal for today is 20 shares. I think we only have 1 right now. Is that right, Zach? Oh, we have 3. Oh, 3. Okay, so we have 3 shares. Can you guys please, oh yes, Yandy, thank you for sharing it. We're getting a couple more shares. We would love it if you guys can do this. We all take a lot of time out of our day to prepare this stuff for you. And the more people who get to watch it, the more time we get to spend doing this. So please, help us hit our shares of 20 shares today. That is our goal. Thank you, Mario. We really appreciate it. Imani, hit us with a share. We would love it. and we're going to get into the hold strategy. Okay, so hopefully everyone understands the refi. If you have any other questions, please hit me with some questions. I'll try and get to them to the end. But now we're going to talk about the hold and BRRRR strategy. So again, we're talking about refi here, and basically this is what Christian thinks. So he actually thinks, conveniently with our numbers, that the house would appraise for $300,000. And so I want to really commend Christian here for being very astute in his analysis here. What he said was that if he sold the property, that we would get $330,000. If he appraised the property, it would get only $300,000. I know that sounds crazy, right? That the appraisal should be exactly what someone would pay for it. And that is true. That is the ideal world. But unfortunately, that is not reality. Sometimes you find an appraiser that's going to put you at $300,000. Sometimes it's $330,000. That's part of the risk of real estate investing. Appraisals are kind of nerve-wracking. You don't exactly know where they're going to come out. But you can do your research like Christian and see what properties are appraising for in the area. And I love that he's being conservative about this. He knows that the market's going for $330,000 for new houses. But appraisals on refis, not that high. Maybe that says that the market's overvalued in Seattle. I don't know. But this is really, really interesting, and really good job, Christian, being conservative and understanding that there is a difference between what you can sell a house for and what you can refi a house for. That is pretty advanced. Well done. Let me take a minute and say that we just hit 17 likes. Thank you so much. I appreciate it. If we could do on Lewis big things. If this all makes sense, guys, by the way, I want to know, Zach is helping me out here and reading me some comments. If this flipping and refinancing strategy is doing well, give me some thumbs up. Let me know that this makes sense. If not, ask me a question. What's up, Jonathan? Thank you for saying hi. All right, guys. So let's keep going. If Christian goes ahead with this, there's an important thing to consider. This is his second property. And a lot of times, if you're not living in that property, you have to put 25% down. That is a commercial loan. Again, Christian, you know your stuff. I'm happy to see you know all this stuff. 25% down on that second mortgage. So that is going to be a $75,000 amount that he has to keep in there. Remember, when we were saying $300,000, you have to keep 20% in. That's 60. In this case, it's 25%. And so that's going to be $75K he has to put down, right? And so he's going to have a mortgage of $225K. Guys, we just hit 22 shares. We really, really appreciate that. I don't see why we should stop now, though. Let's hit 40 shares. Please, I don't think we've ever gotten 40 shares on anything. So if you can just keep going, share this with your friends. We'd be super happy about this. I don't know. I think this video is really interesting. This is a super interesting deal. So let people know about this. Share it with your friends. It would be awesome for us. So the thing about this deal is that means that Christian has to have $75K in equity, right? And I don't know if he has that, right? So he's put $281,000 down. And so if he refinanced at $300K, the cash out piece, remember we talked about how much cash you can pull out, is only minus 281 here. Sorry, it's going to be $19K. So that's not bad. I mean, don't get me wrong, right? You just made $19,000. That's great. But the 19K is not enough to keep in there. So he's going to have to come out of pocket. So that's where this deal is really interesting. He has to come up with, what's 75 minus 19 is 56. So he needs another $56,000 to be able to refinance this property. Bummer, right? No, not really. Christian has a plan for this. He will do a HELOC, which is a home equity line of credit. That basically means he is taking something like a second mortgage on that first property he has. Remember at the top of the show, we talked about how he owns another house with $335,000 in equity. That's unbelievable amount of equity in a property. It's like 50%. So he can borrow against that. So that's what he's proposing he does. So he's figured this out that he could do a HELOC for around $50,000. So with closing costs, it's actually going to have to be closer to $60,000 based on our estimations. And that would come out to two different payments. So Christian's now going to have to pay this is another mortgage, basically. You're borrowing $56,000. You're going to pay money on that. You also have a mortgage on $225,000. So you are borrowing at different rates. A HELOC is going to have a higher interest rate than a mortgage is going to have. And that is going to come out to about, and this is rough, I'm just going to make this out, I'm rounding. That's $1,850 a month in payments. Okay. So that's just your mortgage payment. That also includes your taxes and insurance. So that's your escrow payment. That's how much you're sending in the bank every month, but does not include expenses. The great thing about this property that Christian has found is that he can rent this out, he thinks, for $2,200. All right, so that's $2,200. So that means that he will be making, and again, I apologize, I'm actually going to grab a new marker here because this is getting confusing to follow. There's a lot of math in this one. All right, so that means he will be making $350 per month before expenses, before repairs, and vacancy. So we're looking at a strong rental market. We're also looking at a new house. Christian just totally renovated this thing. So we expect that repairs are actually going to be low. So Christian, you let me know, have you modeled this out at all? Because we haven't actually talked to you at all about what you what kind of expenses you're expecting. So you let me know. If you're still watching, let me know what you think it will come out to be. But, just based off my gut feel, I think you have to model at least $150 to $200. I'm going to go with 50. I'm going to split it right down the middle and say $175 per month in cash flow. And, this could go up, this could go down, but I mean, that is not a huge amount of cash flow given what you are looking at here. So you have put in basically only, so actually, this does work out to be okay. Basically, what Christian has in is still his $63,000 in cash, and then this comes out to a 350 times 6. It's only about $2,000 a year. So yeah, it's not the best return on an investment. That's true. So you really got to think about what this is going to do for you. Christian's not going to be making a ton of cash. It's only going to be a couple of thousands of dollars a year. And he has $63,000 in here. Or his other option is to flip it and get $26K. So I'm going to take a break here, and I already see people answering, saying flip it, I like to see it. So here's my question, and I'm going to pose this to you. Because originally, when I was thinking about this first, I was thinking, no, don't flip it, and I'll tell you why. But, see, Susan says, if he's young, it's worth the hold. This is why real estate's fun. It's controversial. There's a lot of different ways to approach this. At first I thought flip it, then I thought keep it. Now I'm thinking flip it. But I'll pose this to you, and keep this in mind before you respond right now. Think about this. Christian said that his goal is to grow a rental portfolio. That is his goal. So let me ask you this. Which is going to get him closer to his goal of having a rental portfolio? Is it going to be having a rental and maybe not making a ton of money, but you have a rental now? Or do you think that with $26,000 in your pocket, you are going to be able to get a deal that cash flows more than that? Because that's ultimately what it comes down to. Flipping it and making 26 grand, that's awesome. But his long-term goal is building a rental portfolio. Is 26 grand in Christian's pocket tomorrow going to help him reach his long-term goal? Frankly, I don't know. So people let me know what you think. I mean, if your goal is building a rental portfolio, is there something you can do to increase that rent? I'm seeing Amani is saying, keep it. Susan's saying, keep it. I love this. So everyone let me know. Keep informing us. What do you think this is? What do you think the good deal is? Christian, are you there? What are you thinking? I see that Mario Simpson says, if his goal is to build a portfolio, it could go either way. I actually really agree. I think they're both good options. One thing that I'm thinking, too, is you could do both. I know that's a crazy theory, but you could refinance it, rent it out for a while, and then in a couple of years, then you could sell it. You are obviously going to be paying closing costs on this deal to refi, but that is the difficult part. Christian, still undecided. We've analyzed this entire deal for you, and it is still undecided. We need more help. So we've only had 27 shares. We want to get to 40. Please share this for us. We would really appreciate it. Christian needs the help. We still can't decide. So Keldon Caton says, all depends on your goals. If this is the goal, if your goal is to come and be a rental property owner, I don't think you can go wrong adding another rental property to your portfolio. Tell us, if you had 26 grand in your pocket in this market, what would you do with it? What would you do? Could you buy another property that's going to become part of your rental portfolio if you had 26 grand? I don't know. I love how this is just split like right down the middle right now. No one knows what to do with it. Christian, we're doing our best. We're trying to help you right now. But the math is like really, really close on the line. So, I mean, one question is, could you, so Christian says, thank you for keep jumping back in. So he says, no, can't buy anything around Seattle with only 26K down. So if that's the case, I'd say keep it. That's just me. I'm going to make my decision. Mario says that he's saying that it's in Seattle. That's good. So I personally think I know a little bit about the Seattle market. I live in Denver, but they have similar markets, and I follow job migration a little bit to see this stuff. I think Seattle's rental market is poised to continue to increase over time. There are huge companies, Amazon, Costco, Microsoft, Google are all moving jobs to this area. Those are very, very high-paying jobs. I do think that this number of $2,200 a month is going to increase. If you can't, like, what are you going to do with this 26K? Are you going to be able to make more than this a month on your 26K, maybe investing in the stock market? If so, maybe you should flip it. For me, I understand sort of the plight here, Christian, because we live in Denver, and Denver is a similar market. The margins are pretty thin right now. Does that mean you should sit on the sideline? Definitely not. I would say that if you can find a way, and this BRRRR strategy is a way, to build your rental portfolio, it's a good thing to do. I think that it's an awesome way to look at this. Someone's asking, Alan is saying, aren't you getting back the initial cash in addition to the 26K? No, you wouldn't. If you look at it, so he's put in 63, and if he's selling it at a net of 307, and he has to pay back the hard money lender again, that only leaves $26,000. So no, you would not be getting your money back. It's only the 26. Mario's saying, if you think it's a great argument for holding, he's agreeing with me that if the available jobs and industry in the region is increasing, and I do. I mean, Christian, you let us know. But if you look at just the overall market in Seattle, it's tough to find a deal right now. What? Oh my God! Is this my future husband, Scott Trench? Who's Madeline Duprez? I don't know, click on it. Anyway, guys, thank you guys for appreciating this. We really like this. Yeah, Amazon is hiring everyone. So that's a really great sign. I think that if your goal is to become a rental investor and selling the property is just going to get you further away from that goal, then you should keep it. Then definitely do that. Maybe it's not the best cash flowing property of all time. Not everything is ideal. Not every market is going to find huge cash-on-cash returns. And you can always sell this. You can hold this for 2 or 3 years, and then if you find an opportunity to upgrade to a better thing, then you can sell it. Like, there's a lot of different option to it. I love that this is turning to a date conversation right now. I don't even know what's going on, but I could just see that there is a oh, Christian, man, you're getting all these marriage proposals, date proposals. This is awesome. So guys, thank you so much for participating in this. Where are we at with shares right now, Zach?
I think we're at 30.
We're at 30. All right. We're not going to go to 40, but can we get to 35? Can we get 35 shares? Someone keep sharing. Travis is saying, keep it. All right. I love this conversation, guys. Thank you. This is definitely, I think this has to be our best deal of the day so far. You guys have been awesome. I love it, how much you guys are participating. This has been a lot of fun for me. As I said, the more that you guys participate in this stuff, the more that you share it, the more that we can broadcast this stuff, the more we get to do this. It would be our goal to do a deal of the day every single day. We would love to do this. It would be really fun, but we need to see people doing this. So when you come on and you share these videos, you participate in the comment, you guys ask each other on dates, all of these things, whatever you do, all these things, it helps us out a tremendous amount. This was really, honestly, one of the most fun videos I think we've ever done here at BiggerPockets. I've had a great time. H. Lee Carter, you can rewatch these videos still. It will be on our, Zach, it comes on our, just on our feed, right?
Yeah, it comes on our feed on the left tab. You'll be able to click videos. It'll be in the videos.
Awesome. So it's not live, unfortunately. We would love to have your comments, but you can still watch the video in the feed. So please definitely do this. Oh my God, that's really hard. Someone's challenged me to say their name. Oh, I don't know how to say that. Can you give us phonetics? Xochipilli? Zachapili? I'm sorry, that is a really good challenge. I don't know how to pronounce your name. But thank you guys so much, all of you. We really appreciate it. Christian, my final opinion would be to hold it. I think you can't go wrong right now. Renting it out, making positive cash flow. You can continue to look for other deals. If you ever find another deal, you can always sell it. It's a really good, I don't think you're going to lose out. You could even sell it for maybe more money in the future. Maybe in a year this goes from 330 to 360 and you could cash out 50K and then you could buy a better holding cash deal. So if you're on the fence, my gut instinct would say to hold on to it and continue to evaluate your options. It gives you more different exit strategies, which I always like to do. So that's my best picture. You're welcome, everyone. What time do you usually post the video? So it'll come right after. Once we are done recording live, which will be in the next couple of minutes, it will go straight to our newsfeed automatically. Zinnia asks, how do you submit for deal of the day? Zach posted it right in the beginning, but we'll post it again. It's on the forums. Yes, Christian, going for the BRRRR strategy. I love this. This is so much fun. I love that you're here, Christian. This is great that we're doing it. We should do a follow-up. Like, Christian, if you're there, let us know how it goes. Maybe we can call you in. We can do like a Skype show or something. I would love to talk to you more about this deal and see how it goes for you, see how you can rent it. But thank you guys so much again. Again, comment, share, like. I really hope you guys enjoyed this video. Keep putting up the comments. This has been so much fun. I guess we'll do this again soon because I'm having a great time.